Okay, so now I want to pick up here with disposing of plant assets, kind of the third part of that chapter. The first part being what's included in the cost, and the second part being depreciation. So this is when the asset wears out or just reaches the end of its useful life, for whatever reason I can't use it anymore. The car can't run anymore. The equipment is no longer functioning. Basically, you have three options. You can simply discard it, which means you're just kind of selling it for scrap and you're not getting anything for it. You can sell it as a used thing, or you can exchange it for another asset. Now, we're not really going to talk about the exchange. That's in the appendix here, and it gets a little bit more complicated, but it's really not that much different than selling it. In any event, whichever way you're doing, you have 4 steps. The first step is to update the depreciation. And you're probably going to have a partial year to deal with here. Unless you sell it on December 31st, you're going to have a partial year depreciation. That's the first thing I have to do to update the accumulated depreciation and get the new book value of it. The second thing I'm going to do is remove the old asset and the accumulated depreciation for that asset from my books. So the asset has a debit balance, so that means I'm going to need to credit that for the full amount. Accumulated depreciation has a credit balance, so I need to debit that for the full amount, and then those two accounts will have 0 balances. If you were exchanging an asset, getting a new one, and you could put that in here too. But 3 would be to record the cash. If I'm discarding it, there is no cash, but if I'm selling it or exchanging it, there's probably, if I sold it, there's cash coming in. If I exchanged it, I might have cash going out. And then you need to calculate the gain or loss on the disposal. So I'll show you each of those. So first we'll talk about when we just discard an asset. Really, you have 2 options here. Either it's fully depreciated or it's not fully depreciated. If it's fully depreciated, all you have to really do is the amount in accumulated depreciation should equal the amount of the asset. So I debit accumulated depreciation for however much is in there, and I credit the asset for however much is in there. They should equal each other because it's fully depreciated, and my debits equal my credits, and both of those accounts will now have a 0 balance. If it's not fully depreciated, you'll still debit accumulated depreciation for however much is in there, and you'll credit the asset for however much is in there, but these two won't equal, and so the difference would be the book value, the difference between the asset and the accumulated depreciation. So the amount of that book value will be a loss on disposal, and that'll be a debit. A loss is always a debit, a gain is always a credit. And when you're discarding it, you can't have a gain. That was always going to be a loss if the asset. So if you're just discarding it, you're not selling it, it has to be one of these 2 situations right here. So here's a problem on June 15th. Perfect Furniture discarded equipment that had a cost of $12,000, residual value of 0, which means they depreciated the full amount, all $12,000, and it's fully depreciated. So to journalize the disposal of the equipment on June 15th, I will debit accumulated depreciation. Since they were depreciating the whole thing and it's fully depreciated, the balance in there must be $12,000, and then I will credit the asset, which is equipment, $12,000. So that one's pretty simple. Here I'm going to discard one that, here's the original cost of the asset, $29,400. Accumulated depreciation, December 31st was $27,000, and I'm discarding it on May 31st. So I've used it for 5 months. Oops, sorry about that. I've used it for 5 months of this year. The annual depreciation is $2,400. So first I have to record the partial year, which will be 5 out of 12 months, and then I'm going to dispose of the equipment. So here's step 1, May 31st. Depreciation is $2,400 a year. and I am only taking that times 5/12, 5 months. I think the easier way to do that is to take 2,400 divided by 12 to get a monthly rate and take that times 5. If you do 5/12, you get 0.41666667 or something like that. So either way you do it, you should come up with $1,000. Sorry, if you did 5/12, you get 0.416667. As long as you leave that in the calculator and take that times 2,400, you'll get 1,000. So I will update the depreciation. I will debit depreciation expense, credit accumulated depreciation for 1,000, and then it's time to get rid of the assets. So I discarded, I didn't get any cash coming in. I will debit accumulated depreciation. There was 27,000 in accumulated depreciation, and then I just put another 1,000 in. So that means there's 28,000 in there right now. The asset is equipment, and so that has 29,400 in there. So the difference, I need another 1,400 to go right here on the credit side so that my debits equal my credits, and that will be loss on disposal. You really have two options. You can either figure out what the loss is first, or you can plug in the ones you know, accumulated depreciation and equipment, and then say, okay, what's the difference? That has to be the loss on disposal. Because it's still a journal entry, so my debits still have to equal my credit. So you can do it either way. At the beginning, you could have said, all right, the asset was 29,400. I now have 28,000 in accumulated depreciation. So there's the cost. There's the accumulated depreciation. So I have a book value of 1,400 when I discarded it, and that's the amount of my loss. Okay, so that's discarding it. We're really going to talk about two options, discarding it or selling it. And you can discard it as it's fully depreciated, or if it's not fully depreciated. Again, first step is to update the depreciation, and then get the old one off your books. So debit accumulated depreciation, credit equipment, and the difference goes to the loss. Okay, if I sell an asset, I have really three situations. The selling price is exactly equal to the book value. The selling price is greater than the book value, which means I have a gain, or the selling price is less than the book value, which means I have a loss. It has to be one of those three situations. If I'm selling it for exactly the book value, I will debit cash, because somebody paid me for this. I will debit accumulated depreciation, because that has a credit balance and that needs to be debited. And then I will credit the asset, because that has a debit balance. And if I'm selling it for exactly the book value, the difference between the asset and the accumulated depreciation is the book value. That's how much cash I got. The second situation looks very much the same, except I'm going to be debiting cash. I'm going to be debiting accumulated depreciation. I'm going to credit the asset, equipment, or whatever that is. And then in this case, the amount of cash I got is greater than the book value. So that means I'm going to need a little bit more over here on the credit side, and that will be gain on disposal. Sorry, I'm running out of room here. And if I sell it for a loss, same thing, except instead of a gain, I'm going to have a loss. So I debit cash, I debit accumulated depreciation, I'm going to credit the asset, since that has a debit balance. And now, in order to make my debits equal my credits, I'm going to need a little something over here on the debit side, because the cash wasn't enough to make up the difference between accumulated depreciation and the asset. So I have loss on disposal. Again, in any of these situations, you have two options. You can plug in the cash, the accumulated depreciation, and the asset. All of those will be given to you in the problem. And then you can say, if my debits don't equal my credits, where does it have to go? If it's on the debit side, it's a loss. If it's on the credit side, it's a gain. Or you can figure out the gain or the loss first, and then you know which of these situations it's going to. And I think in the MyLab problems, a lot of times they kind of have you figure that gain or loss out first. So calculate the book value, compare that to the cash you're getting for it. And then if you know it's a gain, it's going to look like this one. If you know it's a loss, it's going to look like this one. So in this one, Mill Creek Golf Club purchased equipment for $31,500. That's my original cost, $31,500. They sold the equipment on December 31st. Now, the fact that they sold it on December 31st means we don't have to do that partial year depreciation. We would have just done the depreciation right before we sold it. If we sold it at any other point in the year, we would have had to do that partial year depreciation first. But at the time of the sale, the balance in accumulated depreciation is $21,000. So we're going to journalize the sale of the equipment. So, oops, I keep doing that. Sorry, if we want to figure out the book value first, we sold it for $22,000, right? $22,000 is what I sold it for. The book value, I'm running out of room over here. $31,500 is the cost. Accumulated depreciation is $21,000. So I've got $10,500 is the book value on here, right? I sold it for $21,000. The book value is $10,500. So I've got a gain on the disposal of $11,500 because the amount that I got for is greater than the book value, so I have a gain. So that means it's going to look like this. I'm going to debit cash for the $22,000 I got paid. I'm going to debit accumulated depreciation for the full balance in there, which is $21,000. I'm going to credit the equipment, the asset, for $31,500 is the cost of the asset. That's what it's still sitting at. And so now my debits are bigger than my credits, so I need another $11,500 over here to make them equal. And so that is gain on disposal. You don't really, I left a little too much space there. I didn't want you, that's not a space. Okay, so in this, again, what you could have done was plugged in the cash, the accumulated depreciation, and the equipment, and then said, okay, where do I need my debits and credits to be? But in this case, we've already figured out that we have a gain of $11,500, so we know that goes on the credit side. And just to double check yourself to make sure your total debits equal your total credits, and you're good. Okay, in this one, the Pellman Company purchased equipment for $32,000, so there's my original cost. They sold the equipment for $5,000. Again, we sold it on December 31st, so we don't have to do that partial year. Accumulated depreciation was $22,000. So let's figure out the book value at the time of the sale. That would be the $32,000 cost minus $22,000 in accumulated depreciation gives me a book value of $10,000. I sold it, so I think sometimes in the book they call it the current market value or something, but I sold it for $5,000, and the current book value is $10,000, so I have a loss of $5,000. So that should be on the debit side. So the journal entry will be cash. I got $5,000 in cash. And I debit accumulated depreciation for $22,000. I'm going to credit the equipment for $32,000. So now accumulated depreciation has a zero balance, equipment has a zero balance, the cash is recorded going in, and I need another $5,000 over here on the debit side to make my debits equal my credits, and that will be for loss on disposal. So those are really your options. You know, you can discard it, either fully depreciated or not. You can sell it for a gain or sell it for a loss, or sometimes you could sell it for exactly the book value, in which case you just won't need to, you won't have a gain or a loss. The last thing in here is natural resources. This would be like where I bought a mine, like a copper mine, or something with some sort of ore or oil refinery or something like that. It works exactly the same as depreciation, except I call it depletion. I'm depleting the resource as I use it up instead of depreciation. And I use the units of production method, where I will come up with a rate. I will come up with a depletion per unit rate, and then times the actual amount that I extracted from my mine or my oil rig or whatever. Here's an example in that one. Again, all these examples are in the practice demo set, so you can look at this and you can go back and work those if you want, however it works for you. I like these. These are some big numbers here. I guess that's 60 trillion, billion, I don't know. So I'm going to, again, what method do we use? It's units of production. And so the first thing I do is come up with the cost divided by the estimated usage to get my per unit rate. So my oil reserve, the cost of it, or the 60 gazillion here, 3 more I think, divided by, I'm expecting there to be 5 billion barrels of oil in there. So the 60 divided by, 3 more. 60 divided by 5 gives me a rate of $12 per barrel. That's my depletion rate per barrel. And so then in this year, in 2007, I sold 900 million barrels. So I'll take that times the 12, and my depletion expense then will be 10 billion 800, I don't know, 10 trillion, whatever that is. I guess I should know, but I don't normally have to deal with numbers quite that big. My checkbook doesn't go up quite that high. So the journal entry will be depletion expense and a debit for 10.8 and a credit to accumulated depletion 10.8. So it works just like depreciation, except I call it depletion instead.